All right, let's do a market update here on the 18th for the week. We got a big week coming up here, FOMC meeting. We got the basis rate hikes coming up. It's either going to be 75 basis points or 100. My thoughts on how we're going to go into the FOMC meeting is I think it's most likely we're going to be red going into FOMC based on the uncertainty of 75 or 100. I don't see how we're going to have any type of big green days going into that. Like that wouldn't make any sense. I think that if we're red going into it and we get a 75 basis hike, that'll be pretty bullish because we sold off almost, we've gone from 432 all the way down to 380. So I think it's pretty much baked in. But if we get the 100 basis rate hike, then I think we're going to sell off more. But again, I don't really even like, I look at the news a little bit, but I really like to follow the chart and try to tune out the noise, because I feel like if you're taking the news too much into account, that could make you a little bit more biased and you could miss a move just by ignoring the chart. I think the chart is the most important thing. And what is the chart showing us? On the short term, I'll go over that and I'll give you my long-term thoughts after that. On the short term, on the last video, if you watched it, we were right around in this area, and I said that I thought this was going to be an extended fourth wave. And the reason I thought that is because when I saw this move right here, I could tell that it was a corrective move, and that was not setting up for a move lower. And sure enough, we got a 5-wave move higher. And so, building off of that, basically, I still think this is A, B, 1, 2, 1, 2, 3, 4, 3 up here, 4, and then a 5th wave. Could this go higher tomorrow and complete this 5th wave higher? Yeah, it could. However, I don't expect it to go that much higher. I think that if it goes much higher at the open, it could be flat at the open, or we're going to be red at the open. That's kind of my thoughts on that. If I'm wrong, I have to have an invalidation level. My invalidation level would be breaking back in to, actually, it would have to be into the first wave. So my invalidation level is actually breaking into the first wave, which would be 390.22. So basically, if this is the first wave, second wave, third wave, fourth wave, the fourth wave can go all the way up to here and still be a valid fourth wave and then come down. So if they want to pump it at the open tomorrow, then it's just an opportunity to buy more puts, in my opinion, until it breaks this level at 390.22, 390.25, something like that. But, I mean, based off this AB wave right here, if they want to pump it to the 1.61 fib, that would take it all the way to 388.22, 388.18. So that's a possibility. I still don't think it's very likely based on how far the B wave went down, came all the way down to the very bottom. I think we topped out on Friday. But it's possible they pump it all the way to 388.18. And again, my invalidation level is at 390. So then after that, where are we looking for? We are looking for a move. I'm going to use this whole wave here instead of all the way up here. I'm going to, based on Friday's close, my target for the 5th wave of the overall 3rd wave is 379.37. So we got right here to possibly the 0.61 fib at 377.68. So we're expecting that probably on Monday or Tuesday. But then again, look at this. This is extended 5th wave. We have 1, 2, 1, 2, 3, 4, 5 for the overall 3rd wave, and then we should bounce. So the bounce would probably take us back up to we'll just do the 50% retracement. The bounce would take us back up to like 383 possibly. So that would be a fourth wave, maybe going into POW, I'm guessing. So fourth wave right there, and then the overall fifth wave, which would complete the whole thing. Let's take it from the 50. The whole thing completed would be 383, a little bit higher. Target is somewhere in the low 370s. So I have us going to about 370 to 372. Based on the fibs, that would complete the overall fifth wave. And then this would be, again, the overall extended fifth wave of this move. So it'd be 5. And that would be the end of the overall B wave. So if we zoom out here, 2-hour time frame, we have the overall A wave right here. We have A, B, C, A, and then we have A, B, C down here at 370 for the overall B wave. And then I'm expecting the selling to be finished at that point, and then a 5-wave move higher to complete the overall B wave. And if we go to 370, I would expect us to pretty much come and maybe double top here or go a little bit higher, maybe to like 440. So I have this going to 450 right now, but I could see us going to like 440 going into midterms. And then if this plays out like I have it, then we would be looking at an overall B wave this whole time. And everyone calling for the big move right here would be wrong. And the big move would actually be coming after the midterms are over. And if we zoom out here on the daily time frame, actually weekly's better. Based on this, if we go to 440 or 450 to complete this B wave, then we can take that minus the top up here. It comes out to about like 30 points. Below the A wave is 363. I'd be looking for somewhere between like 330 or the 1.61 fib of the A wave, which is at 290. So I would expect the C wave after this B wave completes, if it plays out like that, to finish between 290 and 330 for the overall C wave. And then the question becomes, after that, where would that take us to? 330 would take us to about the 0.61 fib. This would be a normal second wave correction, actually. So let's just say that if we're zooming out here on the monthly time frame, let's just say we have 1, 2, 3. COVID crash was the 4th wave, and then we have this is either the end of the 5th wave, so this could just be 5 right here, and we're correcting, or it's the first wave of the 5th wave, and this is a second wave pullback. If it's a second wave pullback, then we're going to expect to see new highs that could go all the way. I'm talking going to like 600 or 700 over the next couple of years. So that's a possibility. Or it's also a possibility that we see ABC down here to this low 300s, and then that ends up only being an A wave correction. Well, okay, let's say this is actually the 5th wave right here, and we're trying to correct 50% of everything that we've done over the last, since the beginning, like since 1993. So let's say we're going to correct 50% of all of this. We'd be looking at a minimum of 263, possibly all the way down here to 215, or even down here to 137 over the next like 5 or 6 years. That is definitely a possibility, because if you look at this, let's say this is A, B, C, A, and then we bounce for a B wave, the B wave could even come past the top of the first wave. We could make new highs, and then it could come straight back down below this too. So basically, I'm saying that we're going to go to 290 to 330, most likely. We're going to either bounce to pretty much the high of this, or come back here in the 400s and then go to a lower low, or this is only the second wave of the overall fifth wave, and we're going to go to like 600 or 700. All depends on the Fed, and no one can tell you what exactly is going to happen, obviously, but those are two possibilities. But again, the long term to me doesn't really make that much difference right now. I have a long-term portfolio that I want to invest correctly too, but for short-term trading, like all I care about is this move right here. And like I said, I think we're going to go to lower lows, probably going to go to a bottom of about 370 to 372 would be my target. And if we go to the dollar is still, like I said in previous videos, still hanging around here, and I feel like it's still going to sell off going into midterms to 103 and 104. If it started doing that right now, we wouldn't be able to correct, because that'd be very bullish for the overall market. So I think over the next week or two, we're going to start moving higher in the overall market, and I think the dollar is going to come down here to 103 or 104. So that's just my thoughts going into midterms. I'm pretty bullish probably by the end of September. And then the VIX. VIX, again, technical analysis is not very good on the VIX. However, when I see a pattern that looks pretty good, and I can use that pattern to my advantage, I take advantage of it. So we have 1, 2, 3, 4, 5. First overall wave. We have A, B, C, A, B, C for the overall second wave. And then we have 1, 2, 3, A, B, C, 4. And well, actually the fourth wave might be done right here. And this looks like, to me, it looks like a fourth wave right here. And then this right here looks like a start of a fifth wave. So let's see. This looks like a first wave of the overall fifth wave and a second wave. And so if that is valid, I would be looking for probably 30-ish on the next move higher. So again, the VIX is definitely showing the exact same thing that I'm talking about with SPY. We're going to go lower. We have 1, 2, 3, 4, 5, second wave, third wave to 30, and the overall target, again, for this third wave, based on this first wave, is 33. So I still see that happening. So 1, 2, 3, pull back a little bit, and then maybe one more high, and then we can start finally reversing overall in the VIX. So I think the VIX has got a lot more to go, and this week should be pretty bloody, in my opinion, based on all the factors. The only thing that could be bullish is the dollar, but the dollar is holding up here in the high 109s, and we'll see what happens with that. It's very kind of, it's this, you look at the monthly chart, it's just kind of, I'm still looking for that red candle. Can't get it, but hopefully eventually. The U.S. 10-year yield still staying high. Is it possibility that it's still a B wave? Yes, definitely. I still think it's going to come down here to the low 2%, probably over the next couple of months. We'll see what happens, but this definitely looks like a B wave right here. So A, B, C down here is what I'm expecting. So that's pretty much it. Just expect a move lower in the overall market. Invalidation level is at 390.22, which would cross into the first wave. Anything below that is a short. However, I could see them pumping it to 388.20 at the start of the day tomorrow. That's just another opportunity to add more puts for the move lower to 377 to 379, and then we bounced to 383, and then a move down to low 370s to complete this. It's possibly if you go down to low 370s, we actually just go down and do a double bottom with the June lows as well. So that's pretty much it. I'll put the key takeaways in the description. Let me know what you think in the comments. And as always, please like and subscribe to help the channel out. And I will do another market update tomorrow after the close. Maybe during the day too, if we get a big move lower.